4 stocks to own in January 2021. Because the rollout of COVID-19 vaccines has begun, hope for an economic recovery this year is in the air. However, the U.S. is still seeing the highest death toll globally, according to data aggregated by Johns Hopkins University. And Europe recently announced tighter and longer coronavirus lockdowns to control the spread of a new, more contagious, variant of the virus. Amid the pandemic, the Robinhood app, which is known for its commission-free trades, saw an influx of investors, particularly millennials. For a stock to be listed on the Robinhood 100 list, it must generate some buzz. So, not all stocks on the list are fundamentally sound. Visa Inc., V. Johnson & Johnson, J&J, Walt Disney Company, DIS, and Uber Technologies, Inc. Uber are currently on the Robinhood 100 list, but not solely because of market hype. We think these stocks are strategically positioned to soar in the upcoming months based on their fundamental strength and market dominance. So, it could be wise to own these stocks this year. Visa Inc., V. Founded in 1958, V operates as a payments technology company worldwide. It connects consumers, merchants, financial institutions, businesses, strategic partners, and government entities to electronic payments. The company provides its services under the Visa, Visa Electron, Interlink, VPay, and Plus brands. V is on the Robinhood 100 list and has 84% of analyst ratings it as of buy. The company's revenue increased 5.5% sequentially to $5.1 billion for the quarter ended September 30, 2020. While data processing revenues increased 4% year-over-year to $2.9 billion, other revenues increased 5% year-over-year to $361 million. Its operating income increased 4.8% sequentially to $3.14 billion, and its EPS increased 4.7% sequentially to $1.12. Analysts expect V's revenue to increase 6.4% this year, and 17.2% next year. The company's EPS is expected to increase 8.1% in 2021, 25.5% in 2022, and at a rate of 12% per annum over the next 5 years. V has an impressive earnings surprise history, with the company beating consensus EPS estimates in each of the trailing 4 quarters. On January 11th, the company announced the appointment of General Counsel Kelly Mayentullier to the newly created position of Executive Vice President, Chief Legal and Administrative Officer. V announced a strategic partnership on November 23rd to launch Visa Commercial Pay, a suite of B2B payment solutions to help improve cash flow for businesses and eliminate outdated manual processes. Also in November, V announced the completion of its acquisition of Yellow Pepper. The stock has rallied 15.6% over the past 9 months to close yesterday's trading session at $201.86. The stock is also ranked number 15 of 47 stocks in the consumer financial services industry. Johnson & Johnson, J&J. Founded in 1885, J&J is one of the world's largest healthcare companies. The company operates through 3 segments: consumer, pharmaceutical and medical devices. Its consumer segment includes a range of products used in the baby care, women's health, and wound care markets, among others. Its pharmaceutical segment is focused on 5 therapeutic areas, while its medical devices segment includes a range of products used in the orthopedic, surgery, cardiovascular, diabetes care and vision care fields. J&J is on the Robinhood 100 list and has 67% of analyst ratings it as of buy. For the third quarter ended September 30, 2020, the company's sales increased 15% sequentially to $21.08 billion. The pharmaceutical segment, which accounted for 54.2% of the net sales, increased 5% year-over-year to $11.42 billion. Consumer health segment sales increased 1.3% year-over-year to $3.51 billion and non-GAAP net earnings increased 3.5% year-over-year to $5.87 billion, yielding EPS of $2.20, which increased 3.8% year-over-year. Analysts expect J&J's revenue to increase 4.6% for the quarter ending March 31, 2021, and 8.7% in 2021. The company's EPS is expected to increase 12.2% in 2021, and at a rate of 4.3% per annum over the next 5 years. J&J has an impressive earnings surprise history, with the company beating consensus EPS estimates in each of the trailing 4 quarters. The stock has gained 9.6% over the past year and is currently trading just 0.8% below its 52-week high of $161.95. The company announced a cash dividend $1.01 per share on the company's common stock on January 4 for the first quarter of 2021. On December 21, 2020, J&J's Janssen Pharmaceutical Companies announced the initiation of a rolling submission of its biologics license application BLA to the U.S. Food and Drug Administration (FDA) for ciltacabtagene autoleucel (cilta-cel) for the treatment of adults with relapsed and/or refractory multiple myeloma. On the same date, Janssen Pharmaceutical announced the authorization of RECAMBYS in combination with VV Healthcare's VOCABRIA in the European Union for the treatment of HIV-1 infection in adults. J&J's ratings reflect this promising outlook. It has an overall rating of strong buy, with an A for trade grade, buy and hold grade, and pure grade, and a B for industry rank. Among the 239 stocks in the medical, pharmaceuticals industry, it is ranked number 1. Walt Disney Company, DIS. Based in Burbank, California, DIS is a global entertainment company. It operates through 4 business segments: media networks, parks experiences and products, studio entertainment, and direct-to-consumer and international. While the company's parks, experiences and products segment received a temporary setback amid the pandemic, DIS has been making good progress in the subscription video market with the help of Disney+, Hulu, and ESPN+. DIS is on the Robinhood 100 list and has 74% of analyst ratings it a buy. The company's total revenues climbed 24.9% sequentially to $14.7 billion for the quarter ended September 30, 2020. Revenues from the media network segment increased 10.8% year-over-year to $7.2 billion, while revenues from direct-to-consumer and international segment increased 40.8% year-over-year to $4.9 billion. Disney Plus reported more than 73 million paid subscribers, which surpassed DIS expectations. The total number of paid subscribers for Hulu increased 28.4% year-over-year to 36.6 million. Analysts expect DIS revenue to increase 6.8% in 2021, and 23.5% in 2022. The company's EPS is expected to increase 183.9% in 2022 and at a rate of 41.6% per annum over the next 5 years. DIS earnings surprise history looks impressive, with the company missing the consensus estimate in just one of the trailing 4 quarters. In mid-December, DIS announced a new set of environmental goals for 2030 focused on 5 main areas: greenhouse gas emissions, water, waste, materials and sustainable design. During an Investor Day presentation held on December 10, the company announced that, as of December 2, 2020, its portfolio of direct-to-consumer services had exceeded a total of 137 million global paid subscriptions, including 11.5 million ESPN Plus subscribers, 38.8 million Hulu subscribers, and 86.8 million Disney Plus subscribers. On October 26, 2020, DIS announced that Disneyland Paris had embarked on one of the largest solar canopy energy projects in Europe, which is expected to be completed by 2023. Over the past 6 months, the stock has gained 46.2% to close yesterday's trading session at $173.43. It is no surprise that DIS is rated strong buy in our rating system. It also has an A for trade grade, buy and hold grade, pure grade, and industry rank. In the 16-stock entertainment, sports and theme parks industry, it is ranked number 1. Uber Technologies, Inc., Uber. Famous for its ride-hailing services, Uber develops and operates technology applications that support a variety of offerings on its platform. Its operating segments include Rides, Eats, Freight, Other Bets, and Advanced Technologies Group, ATG, and other technology programs. The company aims to become a fully electric, zero-emission platform by 2040, with 100% of rides taking place in zero-emission vehicles, on public transit, or with micro-mobility. Uber is on the Robinhood 100 with 81% of analysts' ratings it a buy. While the company's ride-hailing services received a setback amid the coronavirus pandemic, its food delivery service, Uber Eats, and goods delivery service, Uber Freight, have become very popular since the onset of the pandemic. Its non-GAAP delivery revenue increased 189.5% year-over-year to $1.1 billion for the third quarter ended September 30, 2020. Freight revenue increased 32.1% year-over-year to $288 million. Uber Pass Plus Eats Pass subscribers exceeded 1 million paid subscribers. but the company's loss per share of 62 cents surpassed the consensus estimate by 4.6%. Analysts expect Uber's revenue to increase 9.5% for the quarter ending March 31, 2021, and 42.2% in 2021. Its SEPS is expected to increase 14.1% for the fourth quarter ended December 31, 2020, 59.2% in 2021, and at a rate of 65.5% per annum over the next 5 years. The stock has gained more than 284% since hitting its 52-week low of $13.71. It closed yesterday's trading session at $56.91. On January 12, Uber announced more of its plans to tackle climate change. Uber expanded Uber Green to more than 1,400 new North American cities and towns. In concert with other companies, Uber joined the Zero Emissions Transportation Association, ZETA, a new organization that will advocate for national policies that will enable 100% electric vehicle (EV) sales by 2030. The company rolled out Uber Connect on December 9 to more than 2,400 new United States cities and towns. Uber's strong fundamentals are reflected in its ratings. It has a strong buy rating with an A in trade grade, buy and hold grade, and pure grade.